Hello everybody, welcome back to ClearSurf Financial Education. Carl Keister here. So today I want to talk a little about the market, what we saw last week, what I think is going to happen this week. We're going into a shortened week because Easter is on Friday. The market will be closed, although the bond market's open half a day. So some interesting things took place this week, and I've got a couple ideas. You want to stick around for that. So first of all, if we're going to look at the 10-year was stuck in a range this week. It didn't keep going up like prior weeks where it spooked the market. It was stuck between 1.6 and 1.7. And the reason why I mention it is if you look at the FANG stocks, the growth stocks, they've kind of been stagnant. So as rates have gone up, and even now they've been flat this week, those growth stocks have not gone up. They've not really moved anywhere in a couple weeks now, maybe 2 or 3 weeks. And so that is because these companies borrow a lot of money to get the growth. And as rates go up, they're maybe not as likely to borrow so much money. So the stocks that did worse last year were the banks, the financials, and energy, and they've done the best this year. So people are still rotating. And now as the country starts to get more vaccines out there, you're hearing more about the opening trade, because there are still states, unlike Florida, we've been open like business as usual for months, if not, maybe not even longer than that, maybe 4 or 5 months. But there's still some states that are kind of hanging on and starting to loosen up a little bit finally after a year. So they're starting to look at the reopening play, so the restaurants and the theaters and things of that nature. But at the same token, you still have people want to get involved in stocks that are moving. So I'm gonna be looking at a couple here. I think it's interesting that one I'm gonna watch close this week is gonna be Netflix. Hasn't really done a whole lot the other day, but I looked at the chart and it looks like it's trying to break back up again. So I'm gonna be watching Netflix kind of close this week to see what that does. Apple's another one that hasn't really done anything. And if there is some momentum into any of those FANG names, again, you would expect Apple to start getting some attention because we're now at the end of the month. And usually that brings in, people start buying and the new pensions that go out and then reallocate their bond and stock portfolio. They may start looking at some of these stocks again and they might find them a little bit more appealing because not all of them are near the highs. I mean, Microsoft is still very close, only maybe $5 or $10 off the high, but Apple's still like $25 off the high. So they may take another look at some of these stocks. So I think it's gonna be an interesting week, getting short. Now, one thing I do wanna mention is I'm really surprised the market handled so well that huge tanker or container ship is stuck in the Suez Canal. It's still stuck as of Sunday afternoon. And it's just tying up billions of dollars in commerce. And I'm kind of surprised the market's just overlooking that. We'll wait and see what happens tomorrow when the market opens up if we keep overlooking that, because on Friday, there were some huge block trades, and I mean huge. There was billions of dollars of stocks that were dumped. A lot of Chinese internet names were dumped, like Baidu, because you're starting to see a little tension between the Biden administration and the Chinese now, where before Trump was pretty much only looking at the tariffs and hitting them that way because of what they were doing for business purposes. But now they're getting a little bit more touchy, the Biden administration, about human rights. And that's very sensitive on the China side. So I think it's interesting to see how they play out. Those stocks were just pummeled. But the block trades were in Viacom and all your media stocks have been up tremendously. They're up hundreds of percents. And some hedge funds actually dumped their positions on Friday. So you saw these huge moves where I think Viacom was down 50% last week alone. And Discovery was down like 30-some%. So those stocks got pounded. They're gonna be interesting too to see, are people gonna jump in there and buy? Or are they gonna wait till maybe some other hedge funds decide to lock in some profits as well? So that's gonna be interesting to watch, to see how that plays out. I'll be watching that one for sure. But again, as I always mention, if you're a long-term investor, there's so much money in the market right now. I saw a chart the other day or a graph. It was amazing. This $1.9 trillion stimulus that went out, it was saying right now, I just read this weekend that Americans have more money in the checking account than they've had in decades, flush with cash from this new stimulus that just went out. So people haven't even spent this money yet. And so you've got all those stimulus that's out there, not just from the United States, but governments across the world. I know Europe doesn't look as good. I've been reading a number of things that says Europe is actually starting to lock down again in certain countries. So that's not great for the world economy. But as we start opening up in this country, and people have been trying to get out ahead of this for a while. The market's been going up. It's been 1 year from the bottom. And when the market rolled over 38%, it's just going straight up. Some companies, up hundreds of percents. I mean, Penn National, the gaming stocks, they're all just exploded. Now, people were locking profits there too. I saw that DraftKings and Penn National have come way off last week alone, way off their highs. So you're starting to see I don't know if it's hedge funds or banks or smart money, let's put it that way. It's not mom and pop, but they're locking in profits on these companies that have gone up, some of them 100%, several 100% in some examples. I mean, Penn National at the bottom was like a $4 stock that went to like 120. So yeah, I'd be locking in that profit too if I would have been smart enough to buy a ton of that stock or, a year ago. So we'll keep an eye on that. But like I say, there's going to be some interesting plays that I think are going to play out here because you have the first quarter's over. So we're going to start seeing numbers for how people did in the first quarter as this economy has started to open up. I think Alcoa is always one of the first ones that reports. So that's going to be interesting to see what they've done. I know most of the commodities have been higher. So that in itself, I mentioned this in the last video. You want to take a look at that one. The last video I talked about how the average home nowadays is like just the lumber alone to build that home is like $25,000 more than a year ago. So commodities have gone up, everything's getting bid up, but you're starting to see some of these big hedge funds, I think it was Tiger Management that did a lot of the block trades on Friday, basically dumping billions of dollars worth of these Chinese stocks. So they think this tension is going to keep ratcheting up, and they want to lock in their profits and maybe move that money to something a little bit safer, get it out of those Chinese stocks. They don't know what's going to happen, and then rotate back into stocks that have been playing well, which there's a lot of talk right now about infrastructure. I know Buttigieg was out there talking last week about maybe charging a mileage tax instead of a gas tax because people are starting to use electric vehicles, and it's not really they're not buying gas, they're not paying a tax for the roads they're using. So they may find another way around that, or they could raise tax on all of us in some way, shape, or form, which they're going to have to in order to pay for this. But I just thought that was interesting. We're talking infrastructure. So on top of that, Biden's talking about spending $2 or $3 trillion in infrastructure. This is on I don't know what it is now, $4 or $5 trillion we've already printed. This is the third stimulus round. So we've got all these trillions, not billions anymore. We're printing trillions of dollars. Now we're talking about infrastructure. So the money's going to find a home, but I just want to see how this week plays out because it's going to be critical. We get past that hump and you get into that first quarter, April, our first quarter behind it, but April into June, that's usually when things start slowing up a little bit. June probably more so than April, but it'll be interesting to see if these companies book these profits or they rotate into other stocks that they think may not have gotten as much attention. And so we'll see. But on the other hand, I've seen quite a few that have gotten just obliterated. So there may be some more rotation of those stocks. So anyway, just want to bring it to you, but we'll watch how the shipping container plays out because that's truly, the amount of cargo that is tying up, it just kind of shows you the weakness of what's going on in this, everybody's moved to the just-in-time philosophy of inventory. So they get there just when they're going to be replenishing. Well, that ship was going from, I guess it was Asia to the Netherlands. So that container ship was supposed to get to the Netherlands with a massive amount of goods on there. So people have been waiting for those products and goods, haven't got them. That could hurt their bottom line. And the longer this goes on, because now ships are going around, it's taking another 7 to 10 days to go around Africa rather than go through that Suez Canal. So we'll see how that plays out. It'll be interesting, but I do think if you're long-term, you have to stay long. There's just so much money, so much printing going on. I don't think the party's over yet. I really don't. I think these pullback, Friday was another one where it had a chance. There were some levels there that could have broken down from the Russell for one of them hit a point where it was a double bottom. If you look back on a week or two ago, double bottom and just blasted up from there. So it seems like you hit these certain key metrics that it gets to and it starts ripping from there. So you've got that. You've also got the fact that the IRS moved the deadline back to May 17th to file your taxes, so people can hang on to the money for another month. What are they going to do with it? Maybe they're going to play the market. Maybe they're going to bet on the NCAA tournament. I thought it was kind of funny too. It also reminded me of an old rule of buy the rumor and sell the news. That's kind of seems what happened because DraftKings and Penn National were rising so much on this opening and getting sports and being able to bet on sports. And now the NCAA tournament kicks off and both those stocks have gone down quite a bit. I saw DraftKings I dropped at least $10 last week alone just in one day that I watched it. So it's interesting because I think they're trying to book profits. Again, smart money's booking profits. So if you're a swing trader or you're a short-term investor, it's never a bad idea to book profits because no one knows what's going to happen next week, how long this episode in the Suez Canal is going to play out. But it just goes to show you how volatile everything can be. And it takes very little for these things to change, and it can happen very, very fast. So anyway, don't forget you have an extra month to file your taxes. If you're getting a refund, go ahead and file it. Don't wait, because the sooner you file your tax, the sooner you get your stimulus check. If you're entitled to one, you want to take care of that. So anyway, until next time, we'll watch it closely and take care.